Hello, everybody, and welcome back to my daily analysis and insight show. Today, we're going to be covering economic data such as the JOLTS job openings that came out yesterday, the Fed Chair Jerome Powell's speech today, and the impact that could have on the market. We're also going to be covering the S&P 500 seasonality and where we are right now and where we expect the market to go by the end of the month. And thirdly, we're going to be covering crypto. We are in an alt season right now, as you can tell with all of these altcoins such as XRP, etc., moving higher, but I'm anticipating BTC, Bitcoin dominance, very, very soon. So don't get too carried away just yet. Now let's get right into the analysis. As you can see here, Jolt's job openings came in at 7.7 million. It was forecasted to come in at 7.48 million. So much, much better here. And I think that's why we saw a bit of a pickup in the markets a bit later in the day. But overall, we saw a bit of a sell-off there because of other factors. Today, what I'm watching is mainly the Jerome Powell speech later on this evening, UK time, 6:45. Okay, so that's something to watch out for. And then later on in the week, we have other data coming out. Now, let's go into what else we're watching this week in terms of economic data and earnings. It is still earnings season. Keep an eye out on all of these stocks. Lululemon in particular is one of my previous investments, and I am keeping an eye on this one as a potential rebuy. But the main data that I'm looking at this week is unemployment rates on Friday and today's speech from Jerome Powell. Okay, so that's something to watch out for. But let's go straight into some other bits. I want to go into where flows were going into yesterday. Okay, so as you can see here, large caps, Apple, Nvidia, Meta, Amazon, now they're picking up again. Okay, so we're seeing outflows from these medium-sized or smaller companies, and we're going into these mega caps again, money flowing into these mega caps. Okay, and that's an interesting theme that I want to cover a bit later. Okay, but the main one is Nvidia. And when we're looking at Nvidia, it's bounced off this 0.236 Fibonacci retracement level, and now we're moving higher. One of the things I'm watching for is the $141 level. That's a cool area there where I know a lot of calls are going to be expiring this week and probably later on in the following week. Okay, so that's something to watch out for. And if this breaks, then we go higher again, and we probably start seeing a momentum shift in Nvidia and probably in the overall market. Okay, so that's something to watch out for, and I want to cover a little bit later when I do my chart analysis. When we're talking about the markets right now, we have to be talking about crypto. And one of the things that I pointed out yesterday was this chart here, which is Bitcoin's dominance. And the thing that I want to point out here is we've seen a drop in Bitcoin's dominance as we've seen flows go into Ethereum. We saw flows go into Ethereum last week, and then we've seen flows now going into altcoins. So that euphoria and greed is now kicking again into the markets. And we have people, casual investors, casual traders buying crypto again. Okay, so that's the key here. Those casual investors and traders are now driving crypto higher. For us, though, as traders that are a little bit more aware in terms of where we're going to go, this is a bit worrying for me right now. So potentially we can go a little bit higher, a little bit lower here on the dominance, and then we can catch out a lot of investors in altcoins. So that's something to watch out for if you're invested in altcoins, a shift back into BTC, Bitcoin, being more dominant than the alts. Okay, I'm going to cover that a little bit later in depth, but I just want to touch base here on this. Now, on the markets, the main theme right now is S&P 500 seasonality. I have mentioned here previously that in my previous video yesterday and last week that we should see a bit of a dip in early December. And then from there, we'll probably start seeing a rise going into the new year and then maybe all the way into mid 2025, which is where I'm identifying key areas that could see resistance. So that's something to watch out for. The seasonality shows that we do typically get that dip in the last 70 so years. We've had this dip in early December and then a buy up again. At the moment, we're experiencing this initial dip here, maybe a buy up again, and then another dip, and then we get full on momentum move going into the new year. Okay, so that's it. And when we look at the data, I covered this yesterday, but when we look at the data, if we have 20% year to date growth in the S&P 500 over 20%, we then see a 4 or 5 to 1.7, so 1.7 to 5% gain typically in the markets, except this year, 1996. And when we've seen around 25%, we usually get around under 3%, so 2.4, 2.6, 2.9, 2.1 here. When we've seen these around the 25% level year to date growth in the S&P 500. And this is for December, okay, performance. So I'm expecting around a 2.5, 3% gain in the S&P 500 in this month alone, okay? And again, when we look at the data, we're again seeing that December is rarely the worst month of the year. And it's only happened once in 2018. That's something to point out here. So the data is aligning with our thesis right now. And when we've also looked at the period between Thanksgiving and New Year's, I've mentioned this a few times, we've typically seen a gain of around 3.7% on average in the S&P 500 between Thanksgiving and the first few days of the new year, and around 5% in the Russell. Okay, so I've already seen around 1% in the S&P 500, and around 5% in the Russell since Thanksgiving or just before Thanksgiving, and now we're probably going to get another 5% moving forward. Okay, 3 to 5%. That's something to watch out for. In terms of where I am positioning my capital, I'm looking at small caps. I think small caps will outperform here. Around mid-December, they will start to outperform the rest of the market. As you can see here, the red and dotted line is the Russell 2K, and then the red solid line is the Russell 2000. So Russell 2K election, so in an election year, it outperforms even the Russell 2000 in a regular year, okay? And especially going into the latter part of the year. And moving forward, going into the new year, usually peaks around March. So the Russell 2000 will usually peak around March, and I expect the overall market to peak around June of 2025. And we've had a lot of discussions here, what I've discussed quite often, how funds, Goldman Sachs and other funds are now predicting 6,300 by the end of the year and around 6,700, 7,000 in 2025. Okay. So again, we have JP Morgan here mentioning the same thing. We've had Goldman Sachs previously that I've mentioned in my previous videos. And I've also identified this as a key area that we can reach by the end of the year in the S&P 500. However, I'm noticing that retail traders are now trading against the market and are probably going to be caught out. Now, it's okay if you're trading short term, you're doing some scalps, you're doing some day trades, or you're doing some option trades to trade short right now, going into mid-December. But moving into the new year or the latter part of December and the new year, you shouldn't be positioned short in the market. You're going to get caught out, and that's going to be positive for the bulls there. Okay, and when we look at the market overall in terms of its health, we can see here that overall we've seen growth in multiple sectors in the S&P 500 as well as the Russell 2000 since the election. So November has been very good. And I'm anticipating a very, very good performance going into 2025 as well. Okay. And one of the sectors that hasn't been performing very well at the moment is technology. Okay. So semiconductors included, and that's Nvidia and other tech stocks. And as you can see here, we typically in an election year, if we're following that 2016 election outline, we get a dip around December and then January all the way to June of the following year, so 2025 in this case, we get a market that is bullish, and then we get a dip. What am I expecting? I'm expecting Nvidia to also carry the market in 2025. I'm expecting tech stocks to carry the market in 2025, and we're now seeing investors being positioned in Nvidia and these larger caps, especially tech and semiconductors at the moment. So this is the key here, okay? This next 6-month period, you have to make sure you're on the right side, so you're playing long, but you're also in the right stocks and the right sectors. Tech, Russell 2000, crypto are the key. And then mid-year, a 10% dip. That's my prediction. That's what I'm expecting based on the data, based on what we've seen previously happen. And then a very volatile market for a little while, and then a good, strong close into the end of 2025 as well. Okay. So that will be taking us to 6,700. That's the key here. That's what I'm watching out for moving into 2025. Okay. And when we look at the Russell, again, I mentioned that we usually peak around March with the Russell, and I think we're going to peak around May, June with the S&P, especially because I think tech will carry the S&P in the new year. But the Russell, I'm already positioning a few trades here, and the overall in the ETFs, etc. I'm expecting a bit of a dip between now and mid-December, as you can see on the chart, and then a move higher well into the year, well into the new year. Okay, now let's go into crypto. Bitcoin, I've mentioned it a number of times. After elections, does really, really well. We're probably going to get 200 to 400K. We have to see how that performs. Right now, we're experiencing an alt season. It's very clear we're seeing various alts performing well. We went from Bitcoin to Ethereum. Ethereum performed quite well a few days ago, and now we're going to large caps. So we've seen XRP, Solano, Filecoin, Cardano, etc. All of these ones performing well, so which is phase 3, and then we're going to get these smaller alts that are going to pop off left, right, and center. Once that happens, then we're going to shift back into BTC, Bitcoin dominance, and that's something you should be watching very, very carefully in the markets, especially if you're looking to invest in altcoins long term. If you're a casual investor, you have to be very careful. If you're a trader, just make sure you start flowing into Bitcoin and other alternatives when altcoins start dipping. And I am expecting a dip very, very soon. This market cannot last forever. And then in terms of alt season and why we're seeing that, we've seen inflows in ETFs like the 2x Ethereum ETF. I mentioned this before. And then when we look at the Bitcoin dominance chart, we can see here it's a very, very clear. We're becoming oversold on this chart here. And when we reach these levels, we're going to typically see the dominance pick up again for Bitcoin. And what is that going to result in? An outflow in altcoins. Okay, that's something to be mindful of. Obviously, it might not happen within the next week or two. It could happen in the new year. We'll just have to wait. I do think that we can get a bit of a deeper dip here on the dominance chart for Bitcoin before we see a pickup and a reversion to the mean, which is probably around the 57%, 58% level. Now, what I want to focus on is the charts. I want to go straight into the analysis. I mentioned tech stocks, but I want to cover this a bit later. Actually, I'll cover it right now. We'll go into semiconductors. As you can see here on the chart, we're seeing a bit of a consolidation here on the ETF, semiconductor ETF, MH. Okay, consolidation here. for a little while, and we're starting to see a bit of a pickup. And I think we're probably going to see the same thing on Nvidia in the next few days. That's the play here. Maybe we get another dip, and then we get the play going into January all the way into June of next year. So this will be S&P 500 tech sector. Okay, this is something to watch out for. The S&P 500 itself, overall, where are we? It's still very flat at the moment. It's consolidating around this level here. Like I said, these have been my predictions for the last 3 weeks now. I'm making these videos here on YouTube, sharing it with you guys, and sharing it with my Telegram group for free. If you go here, 6,100 could be a key resistance area. So we can see we're seeing a slight dip now around early December. Then we're going to get an uptick, and then another dip going into mid-December, coming back here, and then it's going to get bought in by a lot of institutions and retail. Then we're probably going to go all the way to 6,300 as predicted by JP Morgan, Goldman Sachs, etc. So the institutions are bullish. You have to also be cautious here because, fine, if the institutions are bullish, it could be driving prices higher. But if they're telling you they're bullish, maybe they're not bullish. Maybe they're using these areas as liquidity area zones to get out of the market, or maybe even just drive the price a little bit higher before they get out. Okay, the S&P was very flat yesterday. The Russell was at a bit of a loss of 0.7%, not too much. The Nasdaq has been performing pretty well because of the pickup in the larger caps and the mega caps, and now we're seeing a retest of all-time highs. Actually, we're above all-time highs right now, and I think we can go, and I mentioned this in the video yesterday, we can go all the way to 21,700 or 600, okay? And then we might get a little bit of a sell-off similar to S&P 500, and then we get the powerful buy-up going into the end of the year. Okay, these are current predictions, current factors that we're looking at in terms of the seasonality of the markets and S&P 500. Okay, the Russell is pretty much flat here with a bit of a dip. Nothing to really worry about here, in my opinion. I'm not worried about the position that we are in the Russell 2000. I think long term we can get that 40% move all the way to 3,200. That's what I'm looking for. The VIX is very good, and I've mentioned now for a number of videos that we will go to 12. When we go to 12, I think then we're going to get a dip in the market because the volatility is very low, and I expect some volatility to kick into the markets as the momentum shifts temporarily. Okay. Now, crypto. I think let's go into crypto first, and then I'm going to commodities. So if we go into the Bitcoin chart, we're going to see a period of consolidation happening here right now. I am in a long trade since 69. I entered my first trade around 63, and then previously before that around 55. So I've been buying each swing, moving up, and selling and accumulating profits as I go higher. But since October, I'm up around 50-60% on this one, 50% exactly in total on the capital that I reinvested. We experienced a consolidation here. Nothing to really see. Consolidation in Bitcoin, as we're seeing. If you look at the watch list here, this is my portfolio. As we're seeing, altcoins doing really well. And some of these altcoins I invested in are Filecoin, Cardano, Atom. You're seeing Filecoin now popping off. I think it can go to 12 easily in the next few days. With the way it's moving, we're seeing these 15% moves a day. Okay, so right now I am over 100% in profit. 108% of Filecoin. Cardano is around 200, and 50% is probably around 100% right now, considering the 10% gain today. So let's see. Sia coin is one of those laggers that is kind of lagging behind right now, and we're probably going to see growth there. Yes, over 100% here, over 116% on Atom. Sia, again, I mentioned it last video, so I don't want to continuously talk about it. But the one that I'm recently invested in, which is FET, is pretty good right now. Okay, but it hasn't moved as aggressively as other ones. I'm waiting for a buy up and some momentum to kick in FET. And then Apex is one that was notified to one of the Telegram group members notified me about this. This is a nice continuation play here on this one. I think all of these will probably pop off in the next few weeks or so, but this could be a nice continuation play here. The risk reward is pretty nice as well if you put a stop loss around this area. And then we can obviously get these recent highs around $3. So we can get a nice 50% trade, okay, 50-60% on this trade from the current level. Okay, that's one that I've was notified about in my Telegram group, and I suggest you guys should go and join that group. Completely free. I interact with you guys there, and I share ideas all the time. Okay, so that's crypto. Quickly want to go into the dollar, some alternative markets, European markets, and then oil, gold, gas, etc. Okay, the usual I cover here every single day and once a week for a longer video. But if you look at the dollar, I did mention that we're probably going to get sell off here and move higher as we are, and then a dip again. Okay, I drew this very quickly when I was providing some analysis, but I thought it was very, very accurate in terms of where I think it will go. Retest of this area and come back down. So position yourself in the euro, position yourself in the yen, whatever you can when you time this. Okay, you have to time the moment, but it could go a little bit higher and then probably dip again. That's the key. The CAC 40 is picking up, and the DAX, so the European markets, have been picking up lately. The CAC looks a little bit nicer because it has a double bottom here, and I think there's more upside. The DAX has just been on a complete tear since they resolved some political issues in the German market. I thought we were going to get a fall all the way down to 18,200. We didn't get it. We got a breakout, and now we've seen multiple days of gains in the DAX. HSI, this is where I'm looking to position some of my capital. I have bought some of this ETF for my long-term investing or medium-term investing portfolio. I think we can get around 30% going into the new year, similar to the Russell 2000 and overall market, in my opinion. And then oil picking up a little bit today, but not too much. I think it's still very flat. Consolidating here. I am looking to play some oil plays here. I've mentioned that a number of times. Natural gas dipping a little bit further. So let's look at natural gas, where we stand. It's a bit of a lag. Okay, natural gas dipping a little bit further here. As you can see, I have been in 2 trades. I've sold this recent one. We had 1, 2, 3 momentum moves, and then we've had the sell-off. I sold around 26%, and the previous one I sold around 19%. So good moves on the natural gas. Cacao has been on a completely dominant move recently. I really, really like the momentum here. I identified this in one of the videos I made here a couple of weeks ago now, and it was around this area, around the 7,600. And then since then, we have moved around 21% in 2 weeks. Okay, amazing returns there. 2 weeks, 21%, crazy. Now, finally, I want to go into gold and silver. Gold, I was anticipating a bit of a sell-off. It's been very flat. Okay, we're probably waiting for that CPI data coming in on Friday. Okay, and probably some data coming out next week as well. Okay, we're waiting for that inflation data to come out, and then we'll see where it goes. But very flat here. Probably some long-term investors just holding. And then silver probably playing out as I expected. retest around this 20 EMA level, and then probably it's selling off here probably. Let's see, yeah, thereabouts, consolidating around this area, and then we'll probably see that breakout going higher. And then the next level that we have is 36. Let's see if that's possible. Silver's heavily manipulated, so I'm not too sure if we're going to get those levels. Okay, that's it for me today. I suggest you guys follow me and subscribe to the channel. Follow me on Instagram, follow me on TikTok for short form videos, and also join the Telegram group. All of those links are going to be in the bio below.